Now that you've tested your idea, found customers, and started to validate that they will actually buy your solution, it's important to understand how the money works in your business. The great thing about being an entrepreneur is that anyone can be it. You do not have to be a college of business major. You don't have to be an accountant. You don't have to spend years trying to figure out financial management strategies, but you do have to understand how money works in and out of your business. We're going to introduce just a couple of key terms to keep in mind as you start to build your company on a strong foundation of finance. The first term is revenue. Revenue means money that's coming into your organization. Typically that's from sales. So if you start a bakery, that's the money that you receive for every single cookie that you sell. If you decide to start a podcast, that money might be from subscription services that people sign up to actually listen to your podcast, or it might be from ads that you post on your podcast channel and you get ad revenue that comes in. Revenue, again, is the money that's coming into the organization or the company that you're leading. The other term that's important to know, though, is expenses. Expenses are what is the money that's leaving your organization. So how much does it cost to run your organization each day, each week, each month? There's a couple of different costs to be aware of. The first is your fixed cost. So those are things like your rent, that no matter how much business you do on a monthly basis, you have to pay the same amount of rent every single month. Other things in fixed costs might be your utilities, it might be your Wi-Fi connection, things that just you need to keep the day-to-day business running. The variable cost is what changes based on how much you produce or sell. So when you think about the bakery example, your variable cost is going to be the ingredients that you need to actually sell the product that you're trying to get to your customers. That cost is going to change based on how many units you sell. Sometimes variable cost is called your unit cost. So what does it actually take from a cost standpoint to sell one item? If you think back to earlier in our experience, we talked about your minimal viable product, and Scott led you through a 3-up and 3-down exercise. The reason why that's important is that you have to be able to adjust your cost structure to make it work for whatever your needs are. So when we talk about our revenue and we talk about our expenses, what we're going to actually end up with is our profit. And our profit is what tells us if we are going to be able to make money selling what we're trying to sell at the price point we decided on, and that's going to actually cover the expenses it takes to sell that product. The difference is your profit. What's critical to know, though, is that you don't get to just make up pricing to be able to have a bigger profit. So we've talked a lot about customer validation, and customer validation being that people will actually sign up for your newsletter, they'll pay for whatever you're selling, they'll subscribe to whatever service you're offering. But when you think about the price point in that, it's critical to understand what do people value your service at. So they don't know or frankly care how much it costs you to actually produce your service. What they care about is what they're willing to spend to buy that service. So if you try to sell something and you want to sell it for $1,000, but they're only willing to spend $10, you're going to have an issue on your back end to make sure that you actually have enough profit to cover making your idea. If that's the case, you'll go back to the exercise that Scott led through on the 3-up, 3-down to think about how can you change your product to maybe be less expensive to produce so that they'll buy it at a price point that works for your customer and you can still cover your expenses and again, increase your profit.